What's going on, everybody? Welcome back to my channel. For those who don't know me, my name is Will. I'm a real estate agent out here in Los Angeles, California. If you aren't already, please make sure to subscribe to my channel. So today we are going to be going over the June 2022 California real estate market update from the California Association of Realtors. So I have the article pulled up in front of me right over here. So I'm going to give you my reactions as we go along. But first, I want to read this from the California Association of Realtors, giving a little overview of June 2022. So 542 closed sales per day, 350 pending sales per day, and 287 new listings per day. Let's see what realtors are saying. A little over 54% have closed a sale, a little under 49% have entered escrow, and a little over 51% have listed a property. Now, this is where it gets a little exciting. What realtors think will happen. So a little less than 36% think that sales will be up, which is down by nearly 23% from last month. And almost 30% of realtors think that prices will be up, which is down 44% from the month prior. Now, this is something interesting really quick before we continue that I want to talk about, because if you don't remember, last month during my May real estate market update, I said this: I really don't think that prices are going to continue going up. And I still hold true to that. I still do think that prices are going to continue going down. We have seen a significant number of agents now starting to think that prices will go down. Last month, it was a bunch more. We're down 44% now. And it's just crazy to see the change because it's only been a month, but so much is happening so rapidly in the market. So things are just bound to change. And then 82% think that listings will be up, so they do think inventory is going to be up. So let's go ahead and start off with the article. I'm going to zoom in for you guys. So June 27, 2022. Last week's news offer more evidence that year 2022 will continue to be bumpy for the economy and the housing market as inflation remains unsettled. Consumer sentiment hit another record low as many remain concerned about their personal finance being eroded by high inflation that does not seem to retreat anytime soon. Shelter costs, for example, stayed elevated as rental rates continued to rise primarily due to supply shortage. The market began to see some signs of relief in housing supply, however, as inventory, both existing and new, continued to rise as sales began to adjust to higher interest rates. New home sales showed a brief sign of resurgence in recent weeks as buyers took advantage of a slight pullback in rates and rushed to lock in rates before they move even higher. The trend, however, will not be long lasting as rates are expected to climb further in the months ahead. Now, I don't know if any of you caught this with the real estate market, but a few weeks ago, we had rates kind of like settle at about like 5%. And it stayed at that for like maybe 5-6 days, maybe like up to a week. And then they just shot back up to nearly 6%. I think the median for the 30-year fixed was like 5.78%, which was insane. So we did see kind of like that buyer demand go a little crazy within that week because everybody knows it's kind of inevitable that the rates are going to keep going up. So when they noticed that they were chilling for a little bit, everybody really attacked the market. But that really didn't last that long as rates are going back up. But let's go ahead and continue on with the article. Existing home sales decline in May as the market adjusts to higher mortgage rates. Sales of existing homes in the U.S. fell 3.4% in May to an annualized pace of 5.41 million units. Higher prices and rising interest rates have reduced affordability and negatively impacted buyer demand, resulting in sales dropping to their pre-pandemic levels. The national median price of existing homes rose 14.8% over the past year to $407,600 and surpassed the $400,000 benchmark for the very first time. The number of homes available for sale also started rising as housing demand slowed, which is good news for home buyers. Meanwhile, more homes being discounted from their list prices in May suggests that further price softening in the months ahead should be anticipated. There's something really important that I want to talk about here. Now, in this part of the article, it says the number of homes available for sale also started rising as housing demand slowed. Now, I have just a little bit of an issue with that terminology because as much as people think demand slowed down, I don't think it's the demand that is gone from the buyers. I think buyers are just pulling out of the market because of the situation that we're in, but that doesn't mean the demand is gone. All of these people still really want a house. It only seems like it right now that the buyer demand is going down because of how high the interest rate is getting, and homes just aren't as discounted as buyers want them to be. But once we get to the point where homes are really discounted, and even though the interest rate is up, we're hoping that something can balance out to where buyers can actually start to afford homes. And once that happens, you are going to see that buyer demand coming back. So just get ready for that, because everybody at this point is waiting for prices to continue to go down significantly. Now let's go ahead and continue on with the article. Alrighty, so new home sales increase while inventory rises. Against expectations, sales of new homes in May surged 10.7% to an annualized pace of 696,000 units. The surge in sales, due partly to buyers rushing to the market to lock in rates before they rose higher, appears to have pulled sales forward. With rates rising in most recent weeks, home builders have also reported slowing sales trend that may not be reflected until next month when June sales numbers are released. Inventory of new homes also rose, but the bulk of it was still under construction as home builders continue to struggle with supply chain issues. So again, in this part of the article, they're talking a little bit about how the interest rate chilled out for a little bit, which really pulled sales forward, and now we're starting to see it decline again, and home builders are seeing the impact of that. Let's go ahead and continue on with the article. Mortgage applications increased from previous weeks despite rising rates. An increase in home purchase activity drove mortgage applications higher last week. According to the Mortgage Bankers Association weekly market composite index, mortgage loan application volume rose 4.2% on a seasonally adjusted basis from the previous week. Purchase applications alone rose 8% from 1 week earlier, likely bolstered by an increase in the share of adjustable rate mortgages, ARM applications. With rates surging to their highest level since November 2008, the share of ARM applications jumped back to over 10% as consumers looked for other financing alternatives to keep their cost of borrowing down. Now, last month in the May market update, they actually spoke a little bit about the ARM mortgages and the ARM loans, and I spoke briefly about that on how I think that they are going to continue being popular. As you can see, they are continuing to be popular because, again, the buyer demand is there. So these buyers are doing everything possible to try to find a way to make these homes affordable. The only thing that I would say is, please, if you are a buyer, consult your loan officer, consult your lender, and figure out if this is actually the right thing for you or not. I don't want you being stuck in a situation in the future that you didn't know about or you didn't want to be in. So please consult your loan officer about this. Let's go ahead and continue on with the article. Alrighty guys, so rental prices hit another record high, but growth appears to be tapering off. According to Realtor.com, rents climbed 15.5% annually in May and hit a median of $1,849 in the nation's largest metropolitan areas. While it was the 15th consecutive month of growth, May had the slowest annual growth pace for rents since September 2021. The annual growth rate has been steadily slowing throughout the year since after peaking at 17.3% in January. Rents have been surging as a direct result of housing supply shortage. There are simply more people looking for places to live than there are properties for them. Rent has been something that has been absolutely insane. January and February were around like the last months where the market was really, really hot with a low interest rate and very low inventory, and rent was just insane. It's still insane now. And I know how cliche it is to hear from a realtor that, yeah, you should focus on buying rather than, going and renting and whatever. But seriously, during this time, it is something you really need to think about because a lot of people are just throwing their money away and it's absolutely insane. Which, by the way, guys, right now is probably like the worst time to be a real estate agent. I'm not even joking with you. I know that there are always opportunities no matter what market we're in. There's closings happening every day. You just got to go find them. However, looking at the statistics, sellers are having a tougher time selling their home, while buyers have affordability issues. So agents on both sides, listing and buying, are just having a really, really tough time. Whereas in January and February, listing agents were making a bunch of money because whatever listing they got, it was for sure basically that they were going to sell it. And buyers agents were having a really tough time. Now, both sides of the party are having a really, really tough time. So we're entering a very difficult season for real estate agents. So we have to be prepared. Let's go ahead and continue on with the final part of the article. Consumer sentiment fell to a record low. Despite inflation expectations coming in at 5.3% and slightly lower than the initial readings suggested earlier this month at 5.4%, consumer sentiment across income, age, education, geographic region, political affiliation, stock holding, and homeownership status all posted large declines. The University of Michigan Sentiment Index dropped 14.4% from May's reading of 58.4% a year ago to 41.4%. Survey results also suggest that nearly 4 out of 5 consumers expect bad times in the year ahead for business conditions, the highest level since 2009. I know that may be something scary to you guys because we all know what happened in 2008, 2009. It wasn't a good time for the economy. A lot of people were losing their homes. A lot of people were losing jobs. And obviously, a lot of us are worried right now because of how bad inflation is getting. I mean, people can't even go to the grocery store anymore without dropping a few $100 and getting the bare minimum, unfortunately. So the worry is something that is totally understandable. We have to hold our ground and really see where things are going. Let me know what your predictions are with the real estate market. I love when we discuss the real estate market and your guys' predictions. So go ahead and leave them down in the comment section below so we can further discuss what we think is going to happen with the real estate market in the future. If you want to keep up to date with the real estate market on a weekly basis, make sure to subscribe to my weekly newsletter. I post those every single Tuesday and I keep everybody up to date on the real estate market and its current conditions week by week. So make sure to subscribe to that down in the description box below. If you did enjoy today's market update, please leave a like on the video, subscribe to the channel, and make sure to follow me on all my social medias. My Instagram, Facebook, and TikTok will all be down in the description box below. But other than that, I hope you all have an amazing day and I will see you all on the next one.